Hello everyone, welcome to my YouTube channel Indian Bull vs Bear. In today's video, I'll share my analysis of historical trends of the paper sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. So the paper sector in the Indian stock market comprises of companies involved in manufacturing and processing of various types of papers, paperboard and packaging material production, paper recycling and waste management and pulp production. The sector plays a significant role in packaging, publishing, and consumer goods industries. Despite digitalization reducing the demand of traditional writing and printing paper, the rising e-commerce and packaging demand has driven growth. The growth drivers of this sector includes e-commerce boom, ban on single-use plastic, rising literacy and education needs, sustainability and recycling trends, increased government spending on education and export opportunities. The main challenges for the companies of this sector are the rising raw material costs, environmental concerns, digitalization impact, high capital intensity, and logistics and transportation costs. So now in order to identify trends in this sector, I will present two graphs. They are the end result of my analysis of the share price movements of last 10 years of top 10 companies of this sector. The top 10 companies of this sector comprises of one large cap, one mid cap and eight small cap companies. The first graph will show the yearly returns, whereas the second graph will show the monthly returns. So let's start with the yearly returns graph. So this is the yearly returns graph. The green bars in this graph shows the positive yearly returns. The red bars shows the negative yearly returns. The green line shows the uh, number of months with positive returns. The red lines shows the number of months with negative returns, and this orange line at the bottom, this shows the cumulative returns. So let's start with 2015. 2015 was a very good year for this sector. This sector managed to give returns of 67.51%, average returns in 2015, with 7 positive months and 5 negative months. 2016 too was a very good year for this sector with 51.05% returns, with 8 positive months and 4 negative months. 2017 was even better than the previous 2 years, and the sector managed to give returns of 75.12% with 9 positive months and 3 negative months. 2018 was almost a flat return year for this sector with only 3.75% returns with 7 negative and 5 positive returns. 2019 though was a bad year for this sector, and this sector actually gave loss in this year with minus 17.90% returns with 8 negative months and only 4 positive months. The sector recovered a bit in 2020 and gave positive returns of 4.15% with 6 positive months and 6 negative months. 2021 was a very good year for this sector, and this sector gave returns of 39.21% in 2021 with 7 positive and 5 negative months. 2022 again was a very good year for this sector, and this sector managed to give returns of 67.85% with 6 positive and 6 negative months. In 2023, the sector gave very good returns of 40.88% with 8 positive months and only 4 negative months. In 2024, uh, it's an okayish year for this sector with 15.80% returns and 6 positive and 6 negative months. If we see this cumulative returns line, we can see that at the end of 2024, this sector managed to give 1398.53% cumulative returns, which is approximately 15x in the last 10 years. Let's see the takeaways. So, first takeaway is the cumulative return. We have just seen that. Second one is the CAGR. The CAGR of 31.09, I would say a very good CAGR over the last 10 years. Net negative yearly return 1. Again, a very good point. Uh, this sector gave negative returns only once on yearly basis, only once in last 10 years. Best year was 2017 with returns of 75.12%. Worst year was 2019, the only negative year in the last 10 years with negative returns of minus 17.90%. And the positive to negative year ratio is 9 is to 1, a very, very good positive to negative year ratio. Let's move on to the monthly returns graph. Here it is. The green bars in this graph shows the positive mean monthly returns, whereas the red bars shows the negative mean monthly returns. The green lines, they shows the number of years with positive returns, whereas the red lines, they shows the number of years with negative returns. So let's start with January. January seems to be a very good month for this sector as the average returns over the last 10 years in the month of January is 6.09%, with 8 times positive returns in last 10 years and only 2 times negative returns. February, though, is a very bad month for this. In fact, the worst month for this sector by far. And the average returns in the month of February are negative 5.70%. 8 times out of 10, uh, this sector has given negative returns in the month of February. Only twice it gave positive returns. So, no doubt, a very bad month for this sector. March, almost flattish sort of month for the sector with close to 1% average return, 0.98% to be precise. Six positive years and four negative years in the last 10 years. April seems to be a very good month for the sector with the average returns of 7.8% and 8 positive years in the last 10 years and only 2 negative years. May again seems to be clearly a very bad month for the sector with negative 1.09% returns, and 7 out of last 10 years this sector has given negative returns in the month of May. So clearly another bad month for the sector. June, a decent, I would say a decent month with 4.48% average returns, but 5 positive and 5 negative years in the last 10 years. July, I would say a very good month with 6.05% average returns and 8 positive years and only 2 negative years in the last 10 years. August, again, an average month with 3.15% average returns, but 5 positive and 5 negative in last 10 years. September, just above average month with 3.91% average returns and 6 positive returns in last 10 years and only 4 negative returns. October, below average 2.94% average return with 5 positive and 5 negative years in the last 10 years. November, a bad year I would say for the sector as the returns are flattish of 0.72% and 10 times in the last sorry 6 times in the last 10 years the sector has given negative returns in the month of November. And if we talk about December, December is an okayish month for this sector with 3.51% average returns and 6 times in the last 10 years this sector has given positive returns in the month of December and 4 times it has given negative returns. So although there are only 2 months which we can see from the average returns that they are probably the bad months, but there are two other ones which are not good. For example, March and November. Not only they have very minimalistic average returns, the number of times that the sector has given negative returns in these months too are quite high. So these are the average months for the sector. Now let's see the takeaways. Cheaper months, February and May. So clearly February with minus 5.70% average returns and May with minus 1.09% average returns. February with 8 negative years, whereas May has given negative. This sector has given negative returns in May 7 times out of last 10 years. Costlier months: January, April, and July. January with 6.09% average returns and 8 out of 10 times positive returns. April with 7.8% average returns and again 8 out of 10 times positive returns. And July with 6.05% returns and again 8 positive returns in the last 10 years. So these three seems to be the good months for the sector, not only because of higher average returns but also because the consistency, the number of positive years for these months are high as well. The last thing is the positive to negative month ratio, which is 1.22 is to 1, not a very good ratio for the sector, I would say. Nevertheless, so that is all from my side in this video. If you have liked the video, press the like button, subscribe to the channel, let me know in the comments, and share this with your family and friend. I'll be back soon with another video. Thanks for now.